Hey, good evening traders, it's Mark here. It's 10 past 10, or sorry, quarter past 10. US markets have just closed. What a day. So we've had Will Smith slap Chris Rock at the Oscars, and today the Japanese yen has been slapped. And it's not just been today, has it? It's literally for the entire month. It has been absolutely obliterated. If we look at the depreciation of the Japanese yen against the Aussie, it's done about, I think, around 10 and a bit percent. It's appreciated. Let's just take a look from the beginning of the month to where we currently sit. 11.86%, and at the high at one point today it was just under 14%. I mean, these are astronomical moves in the forex market. You're probably asking yourself, what's causing the Japanese yen to depreciate so much? Well, it's an accumulation of certain things. You know, we've got bonds that are dropping, we've got 10-year yields that are rallying, we've got inverted yield curve in Japan that the Bank of Japan are really trying to protect, and ultimately that just leads to Japanese yen weakness. So as it stands, yes, we have been calling for potential opportunities to short the Japanese yen, or not short the Japanese yen, but buy the Japanese yen and short the markets that it's involved in. So short Aussie yen, short dollar yen, etc. And you know, this was one of the price levels we watched. The market just came into it and blitzed straight through it, and that's pretty much been the story of March. You know, every structural point that the Japanese yen has approached in terms of resistance, it's just broken straight through it. So we haven't been caught on the wrong side. It's just a matter of, you know, this is where we were looking for a potential opportunity, but it never materialized. So as that stands, we are now looking for trading with where the momentum is, which is, you know, we're looking at shorting Japanese yen and buying any sort of market against it, providing we get the opportunity. Aussie yen has given us a nice little correction here with a bullish 4-hour candle. We could potentially see this market run on and test that 94 even handle. So there's maybe about 120, 125 points up for grabs here. If we look at dollar yen, we did send out a little signal to one of our members that was something that we are trading, which is a break of the previous 4-hour candle high, because ultimately, even though we were looking for potential reversal with Japanese yen, technically speaking, you don't really want to trade against it until we see something that gives us the belief that the market is going to roll over. And you know, wherever we look on this chart here, all we see is price putting in higher highs, shallow corrections, higher highs, shallow correction, higher highs, a little bit of a deeper correction, and again, but ultimately this market is just going one way. So why try and catch a falling knife? What we need to see is price not only potentially put in a lower high, it needs to confirm that lower high by taking out a previous low, and then we can start to look to trade it. Until that point, we won't be doing anything of the such. We need that confirmation. Another market that we've also been calling for potential continuations back up into the 135 is pound. You know, we did get our move above the neckline. We did see that higher high. We did see a nice correction. There was a 4-hour candle here that didn't break the high, and then we broke the low. So we never took the trade, but now we're looking for price to effectively do one of two things. So where we see this ascending trend line here, where the price is now broken through today, this gives us a potential for continuation of the short. So we might see price rally up into around 130, 150 to 130, 120, and then make a push for the previous lows down at 1.3, or even come back down and test the weekly trend line towards 129.50. So how are we going to look at taking advantage of where we currently sit? Well, right now we're on monthly S2. I'm not sure if you can see it, but it's a very faint line. I have them faded out, so it's in this area here. You can see it there. That's our monthly S2. We can see we've got monthly S1 here, and then we've got our monthly pivot just sitting right up here. So ultimately, where would I look to get long? Well, as it stands right now, we're potentially forming another corrective pattern, so we might see this before we get that, or if we just get our couple of corrections, we might just break above. So before we look for any long opportunities right now, I need to see price get above 132. I don't really want to be taking any aggressive entries now, even though where we look at the monthly S2, we look left, we can see we've got nice bit of support here, bit of resistance, again bit of resistance, bit of support, again more support. So you could look for the aggressive traders. If we get a change in cycle on the 15-minute maybe, and you want to start trading that move, then by all means you can do that, but I'll be waiting for now 132s. Next chart for us to take a look at will be the euro. Again, it's another market. We did call the potential reversal from the 5-year trend line, but since we got the market to reverse from here, it's just been pinned to 1.11. It's not really had any successful move above there, and where we currently find ourselves is just sat in a little bit of a range between these 2 points. So for myself to get long right now on euro, I want to see price get above this blue zone. Price gets above there, I'll be looking to take a trade. You can see price is holding around the 1.1 area. A break below here would see an opportunity to potentially get short and run it back down into the 5-year trend line. Preference is definitely to the upside, a little bit like sterling. So sterling 1.32 to get above, and euro 1.11, get above that, and I'll be looking for long opportunities, and that could see some real nice substantial moves on both of those markets. Let's take a look at the NASDAQ. So the NASDAQ up 1.5% today and pushing strong. But where we currently find ourselves, if we revert back to the video we posted out, when was it? 15th of March, so coming up just 2 weeks ago, price came down into this area and we said basically time to start buying the NASDAQ, look for the opportunities. We're now sitting 2,000 points up. Well, we would be if we were still in the trade, but I exited everything, so I'm not sitting 2,000 points up. Although if any of you are, well done and congratulations. I am now looking for a retracement. That retracement, 2 zones to watch. One is going to be around the 14,350, around these cluster of wicks here. As you can see, we do have a bit of a rising wedge formation coming on, so looking for that price to drop. It could potentially rally into 15.2 before we see price retrace to 14,350. Other area of interest is going to be around 13,800. Now, if we pull in, I mean, obviously price could change from where it currently lies. If price pushes a bit higher, then obviously these fib zones are going to vary. But you know, if we were to maybe let's go up into the zone I just mentioned, which was around that 15.2 area, then we can see we've got 2 lovely correlated areas with structure. We've got this zone here at 14.3, which is the 38.2 retracement, and then the previous cycle high here at the 61.8. So either one of those rejections, and then we can see the market potentially rally from those points. So they're going to be high on my watch list. I'm not taking any trades on NASDAQ where we currently stand. I do want to see a retracement before I get long. And do you know what, guys, I'm going to leave it there for now. We'll see what happens overnight through Asian session, and we'll come back tomorrow with some potential real nice trading opportunities. If you did enjoy the video and the content, please make sure you hit like, share and subscribe. Why would you hit subscribe? It means that the videos, as soon as we publish them, come straight to your inbox and you don't have to search for any of our content. So on that note, guys, good night, happy trading, and we'll see you tomorrow. Bye bye.